The markets are closed, but the business stories are just heating up. Hello, I'm Raine Musñgi. Catch up with us on Business Brief. U.S. President Donald Trump's coming wave of tariffs is poised to be more targeted than the barrage he has occasionally threatened, aides and allies say. Potential relief for markets gripped by anxiety about an all-out tariff war. Trump is preparing a Liberation Day tariff announcement on April 2, unveiling so-called reciprocal tariffs he sees as retribution for tariffs and other barriers from other countries, including longtime U.S. allies. Sources tell Bloomberg Trump will announce widespread reciprocal tariffs on nations or blocs, but is set to exclude some. And as of now, the administration is not planning separate, sectoral-specific tariffs to be unveiled at the same event. The officials said only countries that don't have tariffs on the U.S. and with whom the U.S. has a trade surplus will not be tariffed under the reciprocal plan. WTO Director General Ngozi Okonjo-Iweala has sounded a cautionary note against the dangers of, quote, unproductive trade wars, writing extensively about how much the United States has gained from the global trade system, particularly trade in services. In an article titled America Big Trade Win, Okonjo-Iweala shows how the U.S. has been a clear winner in the global services trade. Compelling data employed by the WTO Chief stands in stark contrast with the U.S. government's claim that other countries have taken advantage of it in global trade. It's a pretext that Washington has used to impose tariffs and other restrictive measures on its trade partners all over the world. According to the article, in 2023, the U.S. runs a services trade surplus with most major economies, with a surplus totaling nearly $300 billion in 2024. The article also noted the U.S.'s near monopoly in high value-added services, receiving more royalties and licensing fees than any other country in the world. American workers are also benefiting from this robust trade, with over 6.6 million jobs created both in U.S. services and manufacturing. Share also expects the U.S. share of services in global trade to more than double to 37%, thanks to digitalization. Data Okonjo-Iweala provided sought to disprove the Trump administration's claim that Americans are being ripped off by foreign countries solely based on U.S. deficit in traded goods. Chinese Premier Li Qiang urged countries to open up their markets to combat rising instability and uncertainty as China braces for further U.S. tariffs. With dozens of foreign CEOs and visiting U.S. Republican Senator Steve Daines at the China Development Forum on Sunday, Li said that in today's increasingly fragmented world with rising instability and uncertainty, it is more necessary for countries to open up their markets and enterprises to resist risks and challenges. He expressed hope that entrepreneurs would be staunch defenders and promoters of globalization and resist unilateralism and protectionism. Sources told Reuters foreign CEOs, including those of Apple, Qualcomm, AstraZeneca, and Saudi Aramco, are attending the forum until today, Monday, and some are expected to meet Chinese President Xi Jinping on Friday. Iconic German automaker Mercedes-Benz pledged to continue investment as the company seeks to build on the market integration of the past decades.
I think this is a big milestone. 50 years of working together. And if you look at where we were 50 years ago and you compare today, our economies are very, very closely linked together. So I think we should use that as a platform to think about how do we develop this into the future? How do we create economic win-wins? It's already so connected that the auto industry, and especially global companies like Mercedes-Benz, we are in all the big economies. Mercedes operates in 150 countries. China is our biggest and most important market. So let's use this anniversary to see how can we work closer and stronger together in the future. And we're investing 14 billion into new products, new technologies with partners also here in China. We're going to industrialize more vehicles also in China. And it's not just our passenger car division. We have an operation for our vans also in Fujian province, and we're in the process of introducing a complete new vehicle architecture for the vans that we will industrialize also here in China. So it is a very, very broad strategy for Mercedes-Benz in China.
Another German automaker, BMW, also said it firmly opposes the European Union imposing additional tariffs on Chinese EVs and hopes that both the EU and China can properly resolve their differences.
It seems that tariffs are a new language the world would like to speak. That is true for Europe, but that is even more so for the United States. We would like to underline again, and we've done that before, that we are a company who foster free trade and cooperation and open discussion on disputes, whatever that is. Tariffs will always have two losers and no winner.
Well, Asia-Pacific markets are mostly higher Monday as U.S. President Donald Trump's April 2 tariff deadline looms. But Jakarta's stock exchange is lower over 2% as Bloomberg reports Indonesia has started transferring ownership of top state companies to the new sovereign wealth fund, Danantara. Meanwhile, in CNBC, South Korea's Kospi was up about 0.1% after South Korea's Prime Minister Han Duck-soo's impeachment was struck down by the country's constitutional court. Japan's Nikkei 225 rose about 0.1%, while Hong Kong's Hang Seng Index was up about 0.1% after China's Premier Li Qiang cautioned rising instability and called for countries to open up markets and enterprises. U.S. stock futures were higher, signaling that equities could extend their recent gains. As Trump mentioned, there would be some flexibility regarding tariffs. However, he reiterated the April 2 deadline for reciprocal tariffs. Meanwhile, oil prices held steady on Monday as investors assess the outlook for ceasefire talks aimed at ending the Russia-Ukraine war, which could lead to an increase in Russian oil to global markets. Meanwhile, the version 3.0 China-ASEAN Free Trade Area aims to unlock new opportunities in the digital and green economies while enhancing two-way trade and investment potential. ASEAN Secretary General Kao Kim-heung outlined the development blueprint for FTA, emphasizing the emergence of exciting new opportunities for investment and trade in non-traditional sectors. Version 3.0 FTA negotiations began in November of 2022.
I think certainly we'll go into all kinds of areas that were not traditional there. Of course, hopefully should be working together more on e-commerce, for example. That's the kind of area we should be looking at because the digital economy is growing. I'm sure for China or certainly for ASEAN. At the moment, we are working together among ASEAN member states, 10 member states, to negotiate the digital economy framework agreement. So again, I think digital economy is important. We have to look at all other new areas, including the green, the blue economy sector. This is also growing. We certainly have to look at what more can be done, particularly in the agriculture sector.
The top diplomats from Japan, China, and South Korea met in Tokyo over the weekend, seeking common ground on East Asian security and economic issues amid escalating global uncertainty. It's the first gathering of the country's foreign ministers since 2023 and comes as U.S. President Donald Trump appends decades-old alliances, potentially opening the door for China to forge closer ties to countries traditionally aligned with Washington. Japan, China, South Korea agreed to prepare for a trilateral summit Japan asked China to lift the ban on Japanese food imports, while both Seoul and Tokyo asked Beijing to help denuclearize North Korea. China said countries can exert international influence together. Over in Canada, Prime Minister Mark Carney has called for a snap election on April 28th. The next election had been set for October 20th, but Carney says he needs a strong mandate to deal with U.S. President Trump's tariff war. Carney, a former two-time central banker with no previous political or election campaign experience, captured the Liberal leadership 2 weeks ago by persuading party members he was the best person to tackle Trump.
We are facing the most significant crisis of our lifetimes because of President Trump's unjustified trade actions and his threats to our sovereignty. Our response must be to build a strong economy and a more secure Canada. President Trump claims that Canada isn't a real country. He wants to break us so America can own us. We will not let that happen. We're over the shock of the betrayal. I'm asking Canadians for a strong, positive mandate to deal with President Trump and to build a new Canadian economy that works for everyone. Because I know we need change. Big change. Positive change.
On the lighter side, close to 66% of Parisians are in favor of pedestrianizing 500 more city streets. In a broader effort to reduce car usage and improve air quality, the city will remove 10,000 parking spaces in addition to the 10,000 already removed since 2020. Voter turnout was at a very low 4.06%, but the Green Lungs Initiative will transform the streets, increasing bike lanes and usage.
My street is already semi-pedestrianized, and there are very, very few cars passing by. I've really felt the benefits because there's very little noise in the street. It's very quiet, you can feel that there's a lot of people walking.
Paris is a city rich in minerals, so it gets very hot very quickly in summer. And so, growing plants clearly helps in countering high temperatures.
When you're making changes and taking new directions, there's a certain discomfort that can't be denied. Yes, it's true, it's annoying, but it also means we have to force ourselves to rethink our own habits. Today, in Paris, it's easier to get around using softer modes of transport, whether it's by bike or public transport, for those who don't want to ride a bike, because there are people who can't travel by bike. But today, it's faster this way in Paris.
Critics, however, question its effectiveness in reducing pollution.
I think this is a bad measure because it's not well thought out. The consequences are never assessed, neither in terms how it disturbs people, nor in terms of costs. And given the absolute incompetence of the municipal team, the result can only be bad because they don't know how to create nor maintain green spaces. I think it would be better to maintain the existing gardens and leave the streets to their intended purpose, that is, for car traffic.
I'm against it. Why? Because since some streets have been pedestrianized, I see and feel that it's more polluted. In fact, it affects my health and public health. And I'd like the authorities to record the pollution level in front of schools and in front of congested streets. Because cars, in fact, don't go through pedestrian streets. They go around, but the air, the cloud of carbon dioxide pollution, passes in front of schools.
We have to pause for a few reminders, but the biggest business stories from around the country and the market's closing data are up next. Keep it here on Business Brief, only on the Bilyonaryo News channel. Welcome back to Business Brief. The insurance industry is still optimistic and targeting growth in 2025. Our correspondent Soo-Jin Kim joins us on the line on this forecast. Soo-Jin, go ahead.
Yes, Raine, despite the country's low insurance penetration rate, now just at 1.6%, insurance companies remain confident that the industry is poised for strong growth. Life UK says the continued expansion of the Philippine middle class is a key driver, noting that insurance growth is heavily dependent on both population size and the middle income segment. The Philippines, they say, is favorable on both fronts. Life UK's chief financial officer says the company aims to outpace industry growth. In 2024, it recorded 48.2 billion pesos in total premium income and a risk-based capital ratio nearing 500%, demonstrating strong financial health amid market volatility. For 2025, the company is targeting double-digit growth, supported by the launch of new products, including the country's first Sharia-compliant takaful insurance for the Muslim Filipino community. Life UK is also banking on its agency force, which has grown to nearly 40,000 licensed agents nationwide. While insurance penetration remains low, Life notes that it is closely tied to per capita GDP and that the Philippines, with GDP per capita still in the $4,000 range, has yet to reach the tipping point where penetration accelerates significantly. And those are latest updates for now. Back to you, Raine.
Thank you so much for that report, Sue Jin Camp. An update on former President Rodrigo Duterte's case at the International Criminal Court. The pre-trial chamber has ordered both the prosecution and defense teams to disclose evidence by next month. The prosecution was told to submit by April 4th how many witnesses and witness statements it will provide. The Duterte camp, for their part, will have until April 11th to submit their observations on the information that prosecution will submit. Duterte's next court appearance is scheduled for September. The Philippines' external debt service burden climbed sharply in 2024, reflecting the country's continued struggle with pandemic-era loans and a high global interest rate environment. That's according to the latest data from the Bangko Sentral ng Pilipinas. The total debt service burden, or the combined cost of paying interest and principal on foreign loans, rose to $7.2 billion last year. That's 15.6% higher than the $14.9 billion recorded in 2023. The BSP says this covers payments on fixed, medium, and long-term credits, among others. RCBC Chief Economist Michael Ricafort notes the rise stems from the past pandemic-related borrowings as well as globally elevated interest rates that have remained high since 2022. The Philippine government's gross borrowings edged higher in January as the state continues to raise funds for its spending programs and debt obligations. Data from the Bureau of Treasury shows gross borrowings reached 213.1 billion pesos in January, up by nearly 5% from 203 billion pesos in the same period last month. The increase, or the same month last year, the increase was driven by a nearly 8% jump in domestic borrowings, which rose to 152 billion pesos from 141 billion in January 2024. Domestic debt made up over 70% of the total, reflecting government strategy to reduce exposure to foreign exchange risks. Higher borrowings remain a key tool for funding infrastructure and social services, but analysts say managing debt sustainably will be crucial amid rising interest costs and a challenging fiscal outlook. Intensified geopolitical tensions and shifting U.S. trade policies may weigh on Asia-Pacific exports, but the Philippines is expected to be more resilient than many of its regional peers. That's according to a new outlook from Moody's Ratings. Moody's warned that no Asia-Pacific economy is completely shielded from the impact of escalating U.S. trade policies, which could weaken global demand and put pressure on export-led growth. The credit ratings agency said the Philippines, along with India and Indonesia, is likely to cope better thanks to its domestically driven economy. Moody's also noted the Philippines and Indonesia face less risk of additional tariffs due to their smaller trade surpluses and deepening defense ties with the United States. U.S. President Trump recently escalated trade tensions, hiking tariffs on China to 20% from 10% in February. He also imposed 25% tariffs on steel and aluminum imports and slapped additional duties on goods from Mexico and China, including a 10% tariff on energy products, 25% on other imports. Philippine banana exporters are sounding the alarm, warning that the country could lose its status as Japan's top banana supplier amid rising regional competition. The Filipino Banana Growers and Exporters Association, or PBGEA, says the competitive pressure is growing with lower tariffs favoring exporters like Vietnam, a member of the Japan-led Comprehensive and Progressive Trans-Pacific Partnership. The Philippines, by contrast, is not part of the trade pact. PBGEA warns that Vietnamese bananas will enjoy zero tariffs in Japan by 2028, further boosting their competitiveness. Vietnam already overtakes the Philippines in China's banana market thanks to stronger output, lower prices, and growing political tensions between Manila and Beijing. Now, despite easing inflation, Filipino shoppers remain highly value conscious, forcing brands to rethink their pricing and promotions. According to Kantar World Panel's Loris Obana, Filipino families continue to prioritize value in their purchases, but value isn't just about price. With 40% of grocery spending still going to sari-sari stores and supermarkets, holding only 26% share, brands need to adapt to changing shopping behaviors.
We really see that shopper baskets go up whenever it's election season, and it cuts across major segments. However, what we do see is that when people are more out of home, they are busier, they stay outside of the house, there are more rallies, then out-of-home consumption may also be something that we can look at. It means that we have to be prepared to also be able to deliver in the format that is expected when people, of course, want to consume out of home.
On to the markets now. The PSEI tumbled on Monday, the worst performer in Asia. The main index dropped over 1% to settle at 6192, back below the 6200 level. Decliners swamped advancers twice over, 123 to 61, with value turnover a slim 4.6 billion pesos. This after the market opened 1.5 hours late today, starting trade at 11 a.m. and closing as usual, bourse attributing the delay to a connectivity issue. The services sector dragged the market, losing 2.3%. Bilyonaryo Enrique Razon's Bloomberry Resorts giving up more than 3% for the day, alongside sister firm port operator ICTSI down almost 3%. Meanwhile, at the foreign exchange market, the peso is currently trading at 57 pesos and 34 centavos to the greenback, weaker than Friday's close of 57.33. And that's a wrap for today's Business Brief. I'm Raine Musñgi. Join us again tomorrow as we bring you the stories that help you plan your next big, bold moves in business, only here on the Bilyonaryo News Channel, always on time.